Hey guys, it's Andrew with Elevate Finance Group. We're going to go over a couple of the best 0% interest stacking methods that we utilize in our business today. So let's get into it. So, personal 0% interest APR cards are great. They're really good for paying down debt on the personal side too. You can do balance transfers. You can pay down some of your personal debt, transfer it over, kind of lower your utilization. What we're looking for ideally is under 30% utilization across all cards, and each individual card should be under 30% too. So sometimes we're going to take when we have a client with a bad credit score, we're going to take a personal new credit card or a business credit card or a personal loan and pay down some of that debt, kind of even it out so that they get more offers. It increases their credit score. It looks better to banks, lenders all across the nation. So some of the more premium issuers, Chase, Amex, Citi, Wells Fargo, Discover, Bank of America, all of these banks, they offer 12 to 21 months of 0% APR on purchases, balance transfers, all that good stuff. So there's a couple things. You can stack personal lines. I've done it myself. I've gotten up to like 80,000 just on the personal side. So it's really good for you to make sure that you're stacking not only the personal side so that you can obviously make your daily purchases, get points, get rewards, gets flights, but also be utilizing your business side and try and keep all of the business expenses on the business cards. A couple things to watch for. There's the Chase 524 rule, which basically they don't allow more than 5 new personal accounts in 24 months. Amex usually approves 1 to 2 cards every 90 days. So try not to keep high utilization on the personal side. Again, on the business side, the utilization does not affect your personal side. Okay. For business credit cards, obviously, we get you guys access to the highest limits in business credit cards. You can get anywhere from 0% to 12 to 18 months on these cards. A lot of them are 12 months, but there are a few that do 18 months. Some examples: Amex Blue, Business Cash, lots of great rewards on that. We have the Cash Inc. That one is great for ads. If you run ads online, we have the Citi Business Advantage and so much more. It's easy to get up to 150,000 on these business credit cards. You can use an LLC or a corporation. Again, there's obviously other lines of credit. The balance transfer piggyback, right? So this is what we utilize to lower utilization for clients. So typically, we'll check out your portfolio on your credit profile and look through it and see what you guys have going, right? And so if we see, hey, we have a couple credit cards, we have a couple home loans, we might have a couple cars, whatever we might have, we want to see a good mix of mortgage, auto, and cards. If you're a little bit newer, obviously, then we can add trade lines to improve your credit score and improve the age of your credit. So for this, we apply for a new credit card, we transfer existing debt, and we try and even out that utilization. The utilization is one of the biggest key factors that can drop you anywhere from 100 to 200 points. Okay, another thing that's really going to help us with funding, right, is if we go to Chase and we put in, $1,000 or $2,000 or $5,000 and let that sit for about 10 days. That's going to allow it to season the account, and then Chase will actually feel more comfortable because you're keeping money with them, and they're actually taking that money and going lending out your money. So they're seeing that you're a client who's going to keep money in with them, and they feel more comfortable to give you higher approval limits. Okay. Cash equivalent unlock. Obviously, there's a way to liquidate these cards, right? So we have access to business credit lines, and we have access to the business credit cards. Now, let's say we get approved for a $50,000 business credit card. And what we're going to want to do is go to one of these companies. Plastic is great. Use them tons of time. And you can liquidate some of that card so that you can put that money into your bank account, and you can utilize that money for fix and flips, down payments, rehab, whatever it might be, right? So all of these different payment processors help to liquidate some of those cards. Do know there are fees. It could be anywhere from 2.5% to 4%, to liquidate those cards. But if you need to utilize just purely cash, we're able to do that. AU trade line leverage, this is what we offer inside one of our programs. It allows us to improve the utilization, and because it lowers your overall utilization, because we bump up your credit line, let's say $20,000 or $30,000, so it looks as if you're using less money, even though you have the same exact lines of credit. But we put you on someone else's trade lines so that you are an authorized user. You can't get access to that money, but it will age also. Let's say that they have 10 years of credit on there. That will help age your credit, and it'll look as if you have older credit and you have more available lines of credit, which helps improve our approval odds and helps us to get higher starting limits for you with all of the creditors that we work with. Bank relationship stacking. This is huge, right? So local banks and credit unions, we work with them. We have about 850 lenders nationwide that we work with for any type of loan. And so these bank relationship managers help us to push to get our clients get higher funding and get their business solutions that they're looking for, right? Their business plans that we submit on their behalf, then essentially to get them a higher limit. So many of these banks pull from different bureaus. So we watch each and every one of your credit scores and your bureaus, right? TransUnion, Equifax, Experian. And then basically we want to see where we should go based off of your credit, where you're at, where we're going to go as far as a bank or a lender to get that funding. Okay. So for example, when we apply for Chase, they typically pull on Experian or Equifax. And then when we pull from Barclays, typically very TransUnion heavy, PenFed, Navy Federal, very heavy on the Equifax. Okay. So pro level stacking, we typically do this within 30 to 60 days, right? We have a prep phase, we clean up the utilization, get you a little bit lower. We remove any recent inquiries. We go and add a AU trade line to make sure that income is reported strong. Anything over $80,000 helps. Again, we can help clients who are making less. It's not an issue. Application blitz, we hit 3 to 5 issuers across different bureaus, and we mix in a little bit of the personal and the business, and then we start to scale the business side, right? And then we can show you guys how to unlock the capital and liquidate some of those funds if you need it. Although we do have business credit lines that we do offer that's going to help with just getting money strictly into your accounts, right? Just a dump of money. So deployment, you're going to take your money, you're going to deploy it into real estate, business expansion, high ROI flips, and always structure to pay back those companies before your 0% APR ends, right? And your exit strategy is obviously to refinance those homes into a longer term loan, pull a HELOC, move that home into a DSCR loan, do a cash out refi, take all the money, and then basically bankroll it onto your next project. All right. So that's basically how we utilize business credit cards in our business for real estate.